So let's talk about the macro and 6 reasons why I expect stocks to rally in December. First, the Fed is set to cut rates in December, and I think maybe more importantly, QT or quantitative tightening is ending. Now, QT started on April 2nd when the Fed began to taper its balance sheet, and that is ending now more than 3 years later. And as you can see on this chart, the Fed's balance sheet has shrunk dramatically. The last time the Fed ended its quantitative tightening program was in September 2019, and that program lasted about 18 months. But let's look at the S&P 500 during that period of time. When QT ended on September 19th, okay, you can see the S&P up until that point was in a range bound, in fact, had a pretty nasty correction, but then quickly gained around 17% over 16 trading days. So it was significant for equities once QT ended. So that's something to keep in mind. Now, as far as the Fed taking action in December, I want to start with the Bank of Japan because it looks like the odds have shifted for the Bank of Japan to actually hike rates in December. 61% odds according to Polymarket. Now that contrasts with what the Fed's planning to do. Looking at Polymarket, again, market-based odds, an 89% chance the Fed cuts in December. So we're really talking about two central banks pursuing different paths. But again, for U.S. equities, it's really what the Fed's going to do. And finally, with regard to the Fed, President Trump just recently said he knows who he's going to pick as Fed chair and announce it soon. I'm going to guess it's going to come around or slightly after the FOMC rate decision in December. But markets are anticipating this to be Kevin Hassett. Number 2 reason for expecting a rally in December is that the economy is still healthy. There's still plenty of pent-up demand, and the ISM manufacturing has been below 50 for 3 years. Now that is going to be updated this week for November, and housing has plenty of pent-up demand. Number 3, the government shutdown's over. We've had a blackout of economic data, and markets don't like the lack of information. That's going to have a restoration of visibility. Number 4, there's performance chasing. Investors are off sides in November because a lot of funds actually threw in the towel. They just thought the markets made the highs for the year. And already 2025 was the worst year for fund managers, with 78% trailing their benchmark through October. Number 5, stocks got oversold. And I think especially when you look at RSI. This is daily RSI for the S&P year to date. And the daily RSI fell to 35 in November. That's the most oversold it got since the April tariff lows. And as you can see on this chart, once you made those lows on the RSI in April, market began to rally pretty sharply. And lastly, it's seasonal. December usually finishes strong. And given the pullback in November, I actually think December is shaping up to be a good year. Good month.